The wealthy pay the bulk of all taxes in America, and they tend to be more charitable. In this episode, I'm going to answer the question, how much do the wealthy pay in taxes? I've been asked this question many times. A lot of people don't understand the percentage, the amount, and how wealthy people actually pay not only as much as 40, 50, and 60% in taxes, but they voluntarily give another 20 or 30% on top of it. So get ready to understand how much the wealthy do contribute to the tax revenue in this country. So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist for more than 46 years. And I've helped many wealthy people. I know people who are worth hundreds of millions. I know several billionaires. And so I'm going to share with you a few insights, some secrets about how the wealthy people usually pay a lot in taxes. They also use tax strategies to redirect otherwise payable taxes to causes they support. I help them with many of these strategies, but they voluntarily contribute more money than most people to causes that they believe in. So I've looked at financial statements, people with net worths, people who are worth $1, $2, $3 billion, and I'm going to share with you where they put their money, how much they pay in tax, and help you understand the differences, because sometimes if you listen to media, you get the opinion that wealthy people don't pay tax or that they have all these tax loopholes. No, generally speaking, the wealthy pay probably 95% or so of all the taxes in America. It's like the 95-5 rule. The top 5% of people in net worth will pay probably about 95% of all the taxes that are paid in America. So yes, they pay the bulk of the tax revenue that is received by the government, but let me share with you how they pay that tax and how they can also give charitably to causes that they believe in, because they believe that if they can choose where their money goes, that it can do more than maybe where government chooses to put their money. Nonetheless, they pay 40 and 50% of their income in federal income tax, plus in 41 out of 50 states, a state income tax. Many wealthy people pay as much as 50 to 60% of their incomes in tax, let alone all the property taxes and business taxes that they also pay, and matching employees, Social Security, Medicare benefits. They also contribute a ton in tax revenue to the federal government. I've written a lot of books, 11 so far. I'm writing a book every year. The rest of my life is my goal. And in most of my books, I talk about taxes, why taxes are an asset. Now people go, what? My accountant, my bookkeeper, H&R Block, is always telling me how much I owe, sometimes how much I'm going to get in a refund, and they think that's a gift from the government. No, you overpaid. That's why you're getting a refund, and they paid you 0% interest. I don't want to go there right now in this particular episode, but I want you to understand that when we pay taxes, it goes to social causes, right? Why do we pay tax? It's to pay for things that collectively we ought to have in society, such as safety, protection, firemen, school teachers, health care, especially for the elderly, on and on and on. This is where our tax dollars go. And frankly, there's a lot of people who just sit back and rely on Social Security or welfare, what have you. And so we could argue all day long about where our taxes go. But as far as the taxes that are collected in America, they generally come from several different places. The biggest is income tax. Now, the federal income tax didn't even come around and stay until 1913, I think it was, because prior to that, they only had taxes on people's income, what people earned during wars, to finance wars. Frankly, during some of the wars, like in World War II, taxes on income for wealthy people went up to like 94%. Back in the 1980s, the top wage earners paid 70% in federal tax. And then you had to pay state tax. Now, there's some states, they charge you 5%. Maybe they don't allow the same deductions that the federal government does, but some charge 8 or 9%. California is the highest. The highest wage earners there pay as much as 12 and 13% on top of the federal rate. So I've seen many Californians who earn more than $400,000 a year as a couple, let's say, that pay as much as 40% almost in income tax, and another 12, 13% in California income tax. So that's about 53%. And then you have on top of that property tax. You go out and you buy things, you pay sales tax. You have all these other tax, road tax when you drive your car. When you add it all up, all the taxes that a lot of wealthy people pay, I've seen them be as high as 70, 80, and 90%. See, the wealthy, they pay the most tax, and frankly, they're responsible for probably 95% of all the tax revenue. So they're already being taxed a lot. I remember a few years ago when Mitt Romney was running against Barack Obama, they were analyzing their tax returns, and the media were saying, oh, look at President Obama before he was president. He had this much income as a community organizer. But see, they were looking at the wrong blanks. They showed that he paid, X amount in tax, and based on his income, the tax was 20-something%, and then the state, Illinois is where he lived in, which is a high rate. And so they were saying, look at Barack Obama, he pays this much. Now, when they looked at Mitt Romney's, he had way more income because he owned and created all kinds of businesses and employed thousands of people and everything. But they didn't add up the taxes that he paid when he matched Social Security and Medicare. See, when you work for an employer, they deduct 7.65% to cover Social Security and Medicare, FICA and Medicare, but then the employer has to match that. When you start adding up those taxes and then taxes on the corporation, all of the different taxes plus the sales tax and property tax, many of these people, when you looked at all the blanks on Mitt Romney's tax return, he was paying taxes through the nose, and then voluntarily, charitable contributions. Mitt Romney was paying 30% of his income to charity. Barack Obama, less than 1% went to charity or to a church or anything like that. And so generally speaking, wealthy pay not only far more in taxes, but they are far more charitable with their money. And so I've seen many, many wealthy billionaires who actually pay as much as 80 or 90% of their money or more out in social causes. But see, whenever they can choose to decide where a lot of that money goes, they might pay 60% to the federal government in taxes, or more than that with all the other kinds of tax, the payroll tax and so forth. But they have maybe another 20, 30% that they voluntarily want to choose where that money goes because they do not like government taking their tax dollars and putting it into causes that they don't believe in. They want to redirect otherwise payable tax, and they get a tax deduction for doing that. But see, sometimes critics, they only look at the tax deduction that a wealthy person gets for giving away money to the Red Cross or the Cancer Society or the Kidney Foundation or whatever it is. They don't point out, look at all this money that they are redirecting. They just go, oh, look, see, look how much money they have. They pay most of the taxes in America. So let me help you understand a little bit more about federal income tax versus state income tax, and then these other taxes and how you can redirect otherwise payable taxes to causes you support. You'll actually help this great country of America far more by not just rolling over and paying more and more in tax, because if you do that, the wealthy people are usually the ones who are creating the jobs, providing the jobs, expanding their plants. If you tax them too much, they go, what use is there for me to hire more people and expand? Every time I do it, I have to give more than 100% of that away in higher taxes. They lose their incentive, and that's why we have recessions. And every time they want to raise taxes, usually we see a recession because people lose their jobs, because the money that they wanted to hire people with goes out the window in taxes, so they have to lay people off. This is simple economics, folks. Now, if you're already curious and you've got to go, you can click on the link below and get a copy of my most recent best-selling book, The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. I'll gift you the book. Claim your free book. It retails for $20. You simply pay $5.95 shipping and handling, which honestly doesn't cover the entire amount. You just contribute that much towards the shipping and handling, and I'll pay for the book. But stay with me and I'll help you gain one or two other insights into this question. So I want you to remember that the top 5% of income earners, high net worth people in America, generally pay about 95% of all the taxes in the country. So they pay more than their fair share, in my opinion. If you keep going after them with more and more tax, pretty soon it's actually hurting the country by raising taxes, because they're the ones that are providing a lot of the jobs and expanding the economy. Now, if a couple earns right now at the recording of this YouTube video, $400,000 or more in America, that couple will pay between 37 to 39.6% of all income over $400,000 between the husband and the wife in federal income tax. So there's about 40%. And then 41 out of 50 states has a state income tax, and generally that's anywhere from 5 to 13% on top of that. That's why many people between federal and state that make over $400,000 a year between a husband and wife, $200,000 as an individual, a single taxpayer, they will be paying as much as 50% of their income in taxes. Frankly, I think that's too high. Frankly, I think we ought to have a flat tax, like a sales tax, where we tax people when they go to consume. Why do we tax people when they go out and invest in America and create jobs? Why do we tax people when they invest it and make money and try to be financially independent? See, I think we go the wrong direction. We should tax people when they go to consume, when they go to buy stuff. That's called a consumption tax. That's another topic. But see, we have income tax, you have property tax, you have fuel tax. In many states like California and New York, before the Trump tax cuts, which actually stimulated the economy, in California, New York, they have high state income tax rates, and they had it because they said, hey, if we charge you 10, 11, 12% in tax, you can deduct that off your federal, and now you owe less to the federal government. Trump said, you know what, I'm only going to allow up to $10,000 of taxes that you deduct so that California and New York doesn't keep robbing the federal government of tax revenue. That drove some of them crazy. And even though a lot of these states are funded primarily with a lot of political candidates that are Democrat that believe like, hey, we should have higher taxes, that hurt them and they screamed and hollered. Isn't that interesting? The super wealthy, they will generally pay in income tax around 40% or more when you add the state. But then all the other taxes, you will begin to realize that oftentimes they pay as much as 70, 80, 90% of their income in tax. But you'll be shocked how many wealthy people voluntarily give on top of that 10, 20, 30% to causes that they believe in, rather than just always relying on the government being responsible and accountable with our tax dollars. I don't even want to go into why, but if you want to learn more about this, claim your free copy of The Laser Fund. This is a 300-page book. Go to laserfund.com. There's 300 pages of charts, graphs, and explanations, and 62 actual client stories. It's 2 books in one, a left brain side and a right brain side. So you pay $5.95 shipping and handling, which doesn't cover quite all of it, but you pay towards the shipping and handling, and I will fire out a copy for you. Claim your free copy now.